Hello and welcome to another Daily Dose of Insights powered by xChange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so we typically have our Macro Monday here at xChange, where we look at the week ahead and what kind of macroeconomic indicators and data points are to be watched because they will significantly influence our markets. Let me quickly share my screen to give you a little bit more guidance on what I'm talking about. First off, quick recap also of last week. Everything on track for both the Fed and ECB interest rate cuts in September. The only remaining real question is whether we'll see a 25 or 50 basis point cut in the next Fed policy meeting. But apart from that, all indicators point towards an interest rate decrease. Then today we had data already released in China. China manufacturing PMI slightly better than expected. Doesn't really change the fact that China manufacturing industries are still struggling, and there's now a big discussion around propping up domestic demand, domestic consumption to revitalize a key growth driver in China. Apart from that, manufacturing still struggling. Then tomorrow we'll have US manufacturing data, especially purchasing manager expectations coming in at expected 47.8, up from 46.8 a month ago, but still below the 50 mark. And this now marks, I think, almost 2 years of a contraction, showing that also there interest rate cuts are very much appreciated. And then on Wednesday, we have the Bank of Canada actually releasing their new interest rate, expected to decrease by 25 basis points. So maybe that's a precursor of what's in store towards the end of the mid and end of the month. And then on Friday, also data from the US, US non-farm payrolls expected to increase between 100,000 and 160,000, with a July increase of 114,000. So that already here, this variance, this spread, this gap in forecasted values or expectations shows the high level of uncertainty here in the market. We'll see what that comes out at. And we actually had, over the past couple of weeks, we had downward revisions of sort of initial data estimates on the US non-farm payrolls, downward revisions, and that also accelerated the discussion around interest rate cuts. So you'll see a lot of data coming in. A lot, of course, will be observed under the notion or under the question mark of how much will the Fed decrease interest rates. And that, of course, will have a significant impact both on container freight rates as well as container prices. Because interest rates significantly influence the cost of financing, for example, of containers, and hence impact leasing rates and container prices, but also it significantly impacts the expected level of demand for shipping capacity. And as we all know, demand and supply basically rule the markets. And if there's no significant uptick or increase in confidence, that we'll see high levels of demand going forward to balance out the oversupply that we have in the market, especially